迎收看澳财访谈，我是克鲁斯。地缘政治和全球经济的不确定性给澳大利亚经济带来了很不明朗的前景。澳大利亚金融产业的分析师们是如何看待未来半年国际及澳大利亚经济金融前景的呢？今天我们就要通过视频连线的方式异地采访悉尼 Wilson HTM 的投资策略顾问 John Lockton 先生。
Wilson HTM 投资集团是澳大利亚一家知名的金融服务公司，其投资经验丰富，拥有115年的悠久历史。该公司除了关注为客户带来最佳业绩之外，还注重支持社区及慈善事业。有着15年资本市场经验的 John Lockton 是该公司高级研究分析员，毕业于经济学学士学位及实用经济学硕士学位。澳财访谈主持人科鲁斯首先与 John Lockton 先生谈到了全球宏观经济的话题。
Hey John, so what is your professional background? How did you start out in the industry and what brought you to where you are today? What would you say is your most memorable experience in your career?
My professional background is widespread again across investment firms, the Citigroups, the Morgan Stanleys, the Credit Suisses, and then locally here in Australia, Challenger International, which does annuities. I worked there for a number of years. And then for the last 6 years, I've been working at Wilson HTM, watching the animal spirits of markets, whether it's the tech boom and the craziness which went on there, or whether it was the absolute despair of the GFC when assets get thrown out, at well below what their real value is. It's watching the interaction of animal spirits, I guess, with capital markets. That's always entertaining and always enjoyable from a professional perspective.
So looking at the volatile political climate that we're in at the moment with the recent Brexit vote, Australia's federal election and results, as well as the upcoming US presidential election that's looming, what's your outlook on global economic change and development? What can we expect in the near future? And is there any issues that we should be wary of?
Yeah, we actually track global policy uncertainty, if you like. There's a number of private industries, institutes around the world which track uncertainty, and you're right, uncertainty is quite elevated at the moment, and our view is that it's probably likely to be that for a little while. Look, I think Brexit adds to the policy uncertainty globally, but for all intents and purposes for Australia and Australian companies, it's, with the few exceptions, it's relatively a little bit of noise, we think. UK is a major trading partner. Obviously, their currency falling will help the attractiveness of UK goods and services for Australians. But for all intents and purposes, it's a little bit of a distraction. In our view, the bigger risk of the Brexit vote is what happens in Europe, and that becomes a more difficult story given those uncertainties we've spoken about, election uncertainties, banking uncertainties, and political uncertainties. So the takeaway from us would be to be a little bit more cautious around investing in European assets.
How do you see the rest of 2016 panning out for both the Australian and global economies?
Relatively subdued growth globally. We expect global growth to be around about 20 basis points higher in 16 relative to 15, led by the US and China not deteriorating. European growth is going to be sluggish. We don't see a large acceleration there, and Australian growth will be a roundabout trend. So more of the same really, little risk of an acceleration, and any fallback in growth is likely to be supported at some point in time by additional stimulus.
Rating agencies have recently had a very negative outlook on Australia's AAA credit rating. Is there a possibility that we could lose this, and what kind of impact would that have on your investment strategies?
Yeah, I think there is a possibility we could lose the AAA credit rating. It will depend on how fast the new government wishes to take the budget position here back to surplus. At the moment, it's into the early part of next decade, and that may be too long a time for the rating agencies to be comfortable with the AAA credit rating here in Australia. Look, to be honest, there'll be a lot of headlines around a potential loss on a AAA credit rating, but for all intents and purposes, it won't really make any material difference to the funding costs for government in this country or for investors. We would be thinking, given the shape of the yield curve at the moment, that it would add no more than really 0 to 10 basis points across the spectrum of low risk to high risk assets. So I think there's a lot of headlines, but in all materiality, it won't really change the investment prospects for Australia or for businesses wanting to invest in Australia.
The ASX and All Ordinaries are performing very well and have been in recent months. What is your outlook for the stock market for the end of 2016, and what sectors do you feel should be overweight or drawn back?
We've had reasonable performance over fiscal 16. It hasn't been a stellar performing market here in Australia. We've underperformed the global equities, and our outlook here at Wilson's over the next 12 months is for really a market to go sideways. Real returns of between 5 and 7%. Most of that, 2/3 of that, being driven by dividend, which remains the key feature here in Australia. So a total return nominally of 7 to 10%, a real return after inflation of somewhere between 5 and 7. We still argue that the yield trade has more legs in the trade. We think there's still downside pressure on currency and on the Reserve Bank to lower rates. So that means our portfolios across Wilson's are heavily weighted towards yield-like assets, whether it's REITs, whether it's infrastructure, whether it's real assets. So we still think overweight positions there. We remain underweight the banks. We think that some of the capital concerns are going to cause the banks to underperform over the next 12 months. And we remain slightly underweight the metals and the materials sectors. Valuations are quite full, and prospects for a breakout in commodity prices aren't particularly strong. So very much a focus towards defensive assets and also homegrown local exposures across housing. Housing still remains a real feature set of the Australian market, and we're heavily positioned on housing plays across Australia.
What is your opinion on the performance of the Australian dollar? Are there any possibilities for the RBA to continue cutting interest rates?
So the Aussie dollar has come off dramatically over the last 2 years from, call it $1.10 against the US dollar. It's now trading in the mid to low 70s. We would call 73, 74 around about fair value. Simplistically, that's about the long-term average since it was floated back in 1983. So we think the currency is around about fair value. The RBA, I think, would like to get that currency lower to stimulate the economy to a higher degree. So we still suspect, all things being equal, there's probably still some downside risk to the currency. High 60s, very low 70s over the next 12 months.
Wilson HTM 公司手下的基金会关注可持续捐赠，目前已经为澳洲65个慈善机构捐款总额达到了300万澳元。
What do you feel is the biggest benefit for those looking to invest in Australia? Are there any areas that these investors should be aware of when coming in?
A couple of big benefits here in Australia from an investment perspective, particularly with equities. We've got a really strong political and legal framework around assets and ownership of assets, which in Asia Pac is relatively rare. A Westminster-based legal system which is well proven and causes few issues with ownership of assets. So I think that's a really key differentiator across Asia Pacific. From an equity perspective, our market, the Australian market, is the best performing market in a real sense over the last 100 years. And a big feature of that is the dividend yield. So here in Australia today, despite what our equity markets have done since the GFC, we can deliver equity yields to investors of about 4.5% to 5% for the average stock on the market. We compare that to the US, where it's going to be 1.8% to 2%. Similar in Europe, and in Asia, it'll be even less than that. So yield remains a key feature. It's one reason why we suspect our market is likely to still be quite well supported over the next 2 to 3 years in this really low yield environment. Cash flow is going to be king, and our market almost uniquely gives investors, global investors, opportunity to take advantage of that yield. Look, the Australian market is going to be well anchored, well supported by that dividend yield relative to global assets, but we are a very small market in a global sense, about 2% of global equities. Whilst we're travelling okay here in Australia in terms of growth, we're not immune from global volatility and global uncertainty. So perhaps as I look out as a strategist over the next 12 months, where do I get most concerns? it's not so much about things being derailed here in Australia. It's more about an event, a sell-off in risk appetite, a significant global downturn which would impact Australia, whether it's a banking crisis in Europe, political uncertainty. So it's the global winds, I guess, which are the greatest concern, I think, for investing here in Australia over the next 12 months.
How do you view increases in Chinese investment into Australia? What areas can it affect, be that positive or negative? And do you feel that this is an investment relationship that we should focus on the further development of? How would you direct this investment to best serve both investors and the Australian economy and industries?
Look, my personal view is that we welcome foreign investment into this country. This country is only just over 200 years old, and ever since the Europeans settled here, we've run current account deficits. We've needed foreign capital to come in and grow, help assist our growth. So, look, from a purely economics perspective, which is my background, whether it's Chinese capital, American capital, or European capital, quite frankly, it doesn't matter. We need foreign capital in this country to grow our asset base and to build our infrastructure and allow us to capture our potential. So that's very much the view of the economic set here in Australia, that foreign capital is very much welcome. Key areas where foreign capital is attracted to this country are, unsurprisingly, the areas where Australia has the best comparative advantage, and they remain across health, across financial services, and then the traditional areas like agriculture, energy and materials. They're really the 5 or 6 key areas where we receive and need capital, and it's likely going forward, given that Australia has a really good product and service offering in those areas, that those areas of comparative advantage are going to be of interest to foreign investors. And we're starting to see that across agricultural spaces and in commodities. And more so, I think we'll see that money attracted into finance, into health, and into other services. Investment in Australia is very much a two-way street. Australian business and Australian investors who are on the receiving ends of capital enjoy a two-way relationship. So silent investors are useful, but also a more fully and rounded investment experience for Australians is where not only is capital coming our way, but we're getting foreign expertise as well. We're a small country, circa just over 20 million people, and we're certainly not the harbour of all great ideas. So capital, which comes with intellectual property experience, is welcome, and we've seen numerous examples of that here in Australia, where capital comes with friendly hands around it.
What is the one piece of advice that you would go to give anyone looking to do well in the financial market?
Do your homework or outsource your homework. And by that I mean, as an analyst, you either need to be prepared to put the time in yourself to do the research, or you need to outsource that and get a trusted advisor. I think the volatility in markets means that the ability to both lose and gain vast sums of money is a big opportunity, and if you're not prepared to do the homework, then you need to find advice and get trusted advice in terms of playing financial markets.
欢迎扫描屏幕上的二维码，关注我们的官方微信，及时收取最新节目动态。以上就是这周的澳财访谈。在下周节目中，我们将面对面采访澳大利亚中国工商业委员会全国首席执行官 Helen Sojak 女士。欢迎您的收看，谢谢。